Essentially, either the SEC refused to acknowledge them, told them to withdraw, basically said this isn't happening, which isn't all that surprising. I mean, if you look at some of the lawsuits out there against Coinbase, Kraken, you name it, they basically flat out call Solana security and say they're not going to mess with that thing.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me is James Seyffart, who's an ETF research analyst at Bloomberg. James, great to see you.
Yeah, happy to be back, Tony. It's been a while.
Well, James,
summer's been good though.
Yeah, the summer's been good, although I wish we were talking in better terms as far as the market. It's kind of bloody right now. What are you seeing on your end? What are you hearing from people? Do you think this is just the normal seasonal, setup where they say September is usually not great, but then Q4 starts to do well?
Yeah, I mean, it's we're just coming now out of the summer, right? And I feel like if you look at trading volumes on anything, it's pretty standard for them to go down in that time of year. There's less things happening. And I guess that's translated over into crypto. So yeah, I mean, I'm not surprised by any of this. I mean, if you look at anything, I mean, it's honestly, I said this on Twitter, which like some people jumped down my throat for, but it kind of reminds me of the way things were trading in 2020, before COVID, and then even right after, like it just kept hitting like that, right around that 11, 12K mark down to 7 and so on. And like that happened for like 18 months straight, it felt like. And that's what it feels like this to me, kind of. I know it hasn't been quite that long yet, but that same range kind of feels similar. It's like that 50, 55 to like near 70 just keeps happening. And we just keep hitting 60 and 58 over and over and over again. And it just feels like how it felt to me when it kept hitting like staying right around 10K. It just feels similar. And obviously, like when you're thinking about this, like I never look to the historical price action for what's actually going on. It's just the vibes feel very similar to me. People were very down and out on the prospects for the market in general, specifically Bitcoin. And yeah, people were still building. So I guess we'll see what happens in the coming months. But yeah, I think we're just kind of in this sideways choppy market right now, and time will tell what happens next.
I know the Fed rate cuts are around the corner, and that could be causing some anxiety as well. In addition to the summer lull, right? They say sell in May, go away, right? And then people come back into the markets come late September. So, do you think the Fed rate cuts is kind of adding some volatility here? We're waiting to see what the job numbers may look like, and then maybe markets will then have confidence to keep going.
Yeah, I mean that's my personal view, right? So I just think a lot of the economic data is softening, pointing towards cuts are likely to happen, right? So I think we're going to see 50 bips most likely in September, but I'm not a rate strategist. Our rate strategist says at least 25, possibly 50, which is roughly what the market is pricing, right? So we're priced now for 100 basis points or 1% cut before the end of the year, and then another 1% cut before the end of 2025. That's currently what markets are pricing. But you said sell in May and go away, and ironically, that probably would have been pretty good for crypto, but not for stocks. Stocks have done pretty well. So it's not all risk assets that are fitting that this year.
Yeah, for sure. So let's talk about ETFs. How have the Bitcoin and Ether ETFs been reacting to this type of environment? We've seen some outflows, although there was some inflows at certain points. So it's kind of been up and down a bit.
Yeah, I mean, if you look at the Bitcoin ETFs, I'd say it's been pretty damn good. I mean, they're their net inflows since they launched is over 17 billion. I mean, no matter how you slice it, that's with 19 billion coming out of Grayscale's GBTC. Yeah, things have been somewhat slow recently, but it hasn't been that bad. Like there's kind of been this trickle that comes in, and then there's spurts of outflows, and then there's another level of inflows that come in, and they more than cover the outflows that we just saw. And that's typically the way that we see categories grow in the ETF world, right? Like they're going to go up and down with prices, and money will come in and out. But theoretically, a real healthy market, you're going to see those asset levels and those flows over the long term tend to go up, and that's what we're seeing. We're not seeing that with Ethereum. So the Ethereum ETFs launched in July, and they have had negative. Let me get you the exact number. They've had negative like almost $500 million in outflows. Actually, over $500 million in outflows. So with the Bitcoin ETFs, we called them the newborn nine, these other spot ETFs besides GBTC that had enough demand to overwhelm the outflows from the unlocking of the GBTC shares, the Grayscale GBTC shares. We are not seeing these other new 8 ETFs or 7 ETFs from the Ethereum side of things to overwhelm the unlock and selling of shares of ETH. So we've seen net outflows since launch. So we were relatively bearish. So our view was like 15-20% was what we thought was going to happen. 20% was my number. Balchunas, my boss, thought 15% of the flows that Bitcoin ETFs saw, we thought Ethereum ETFs would see over the first 6 to 12 months. I think I probably said that on here. Man, we are nowhere near that. So there's a few things we just talked about. Summer doldrums, right? Sell and may go away. That's definitely been the case for crypto. They launched into a very quiet, sideways, choppy market. There's just not a lot of interest in them. But there's a lot of other things that go on here. Like Bitcoin is kind of like, if you're an advisor, like Bitcoin, digital store of value, those things, they make sense. They're very easy to sell. And if you want to diversify with, like, we call it hot sauce in your portfolio, if you're already putting like 2% of your clients' money into Bitcoin, do you need to diversify it with another digital asset? Maybe not. So it's basically Bitcoin first, and then these other things kind of need to fill out their own narrative. I've seen like these issuers and these TradFi people that are trying to sell these Ethereum ETFs and Ethereum in general are working on different things. But like, so I could say Matt Hogan from Bitwise, for example, likes to say like, Ethereum, you should be owning it and viewing it as like part of your tech exposure. Like it almost should be part of the queues in a way. That's the argument that they're pushing. I just think there's no one cohesive argument, so it's a little bit harder. And honestly, Ethereum's a lot more complex than Bitcoin, right? There's a lot more things you can do, so it's a little more complicated. So for all those reasons, I mean, Bitcoin ETFs really done really well. Maybe gone sideways the last couple months, but still holding up well. There's been no issues. Ethereum, honestly, still no issues over there. You look at everything besides ETH, they've taken in well over $2 billion. So, we're looking at outflows, yes, but that's because 2.6 billion came out of Grayscale's ETH, but 2.1 roughly came in to the other products. So they are doing well. They are pulling in money. It's just not enough to offset the ETH outflows.
Yeah, and like you said, like maybe the timing wasn't great given, we headed into summer. And then I'm thinking from a RIA standpoint, wealth manager standpoint, what you said, how much are you going to throw at your clients, right? You spend a lot of time pitching this new product, Bitcoin. It has the branding, it has the mass penetration and so forth. Ethereum, not so much. So if you go to someone and say, hey, there's also this thing called Ethereum, well, what's that? Why is it different than Bitcoin? You have to go through this whole explanation. So it's a harder sell.
Yeah, no, it really is a harder sell. And it's like, as somebody who's like pretty well versed in this stuff, you can kind of get it. So I honestly think like, it would have probably been easier if they had launched like later this year or early next year, because you're also, not only is it those reasons you just talked about, you're also like, the Bitcoin ETFs just launched, like people are just getting comfortable with these things, and then you're throwing another one at them right away. So I think that all of that contributed to the lower demand we're seeing. That said, I also always expected that the Ethereum ETFs were going to be a bit of a slower burn, if you will. Like I thought the type of level of demand that we could see, maybe 25% of the Bitcoin ETF flows, I thought it might take a while to get there. And I thought the Ethereum ETFs could potentially get up to like their market cap ratio, which is like, I don't know, 30, a third, something like that over the longer term. But I think it's going to be a slower burn for all those things we just talked about. I'm kind of second guessing it. So right now I have a bet with Steve McClurg, who used to be one of the guys running the Valkyrie ETFs.
Oh yeah.
He has the under on 15% of the flows in 6 months versus Bitcoin for Ethereum, and I have the over. And right now I'm going to owe him some food at Pubkey in New York City a few months from now. Yeah.
Well, James, look, what we were talking about with the Fed rate cuts and maybe some additional liquidity injections from Janet Yellen and things like that as we head into the elections, right? We know the sitting incumbent wants to, make things look good, the stock market to look good, the economy to look as best as possible. So do you think we see some liquidity injections and we are in much favorable environment where the inflows will increase for both Bitcoin and ETH come Q4 into 2025?
Yeah, I do think it'll help, but part of the problem here is, right, like a lot of this is going to depend on the political nature here. I know a lot of people will say it shouldn't really matter that much, but I really do think the political nature of what happens in November will have an impact here. Obviously, rate cuts theoretically should be beneficial to this market. There's no guarantee that that's going to be the case, but theoretically, that's what should happen. But also, we don't know exactly where somebody like Harris is going to stand, if they're going to follow like the typical way that Biden has handled things. I tend to think not. I think it will be neutral at worst, like maybe slightly positive at best if the Dems win in November. And I think it could be a very positive catalyst if somebody like Trump wins.
Mm. Yeah, agreed. And I know it's very heated right now from the political standpoint, and we'll see what happens. I did want to ask you about Solana. Is the Solana ETF dead? Is it officially? We had some filers, but what do you think?
Yeah, so essentially what happened here is, I've definitely talked about this on your show before. So for an ETF to launch, you need basically approval from two parts of the SEC, and you need two like things that happen at once. The first thing is the issuers have to file their prospectuses or S1s, and they go through the Division of Corporate Finance eventually to get approved. So that's one division of the SEC. But typically, before they would approve those through corporate finance, you also have to get those 19B4s, which we've talked about a lot, right? And CBOE filed 19B4s on behalf of ARK, or sorry, not on behalf of ARK, on behalf of 21 Shares and on behalf of Van Eck. Those filings went through, but they have since withdrawn them. Essentially, either the SEC refused to acknowledge them, told them to withdraw, basically said this isn't happening, which isn't all that surprising. I mean, if you look at some of the lawsuits out there against Coinbase, Kraken, you name it, they basically flat out call Solana security and say they're not going to mess with that thing. So what we've seen is CBOE has withdrawn. So for now, it's dead in the water until we see another 19B4 filing. Nothing can happen. That said, 21 Shares and Van Eck still have those S1s out there. So they're still filed. They're still technically active. They just need to go through that 19B4 process before they can get approved by corporate finance. So are they dead? Kind of. I think, again, this goes back to what I was just saying with the political process. I think if we see Trump in office, it's possible that, actually, I would say it's highly likely we would see another filing because the people would hope that somebody else would be running the SEC. So there could be a change in the way the admin is handling this stuff. So I think that could come down to the presidential election, but also you kind of need a bunch of other things, right? Like right now you have the CFTC and the SEC arguing over jurisdiction. You have the SEC calling these things, Solana specifically, a security. CFTC is saying it's not. And then so like you don't know who has control over what. You don't know what exactly is a security or what is a commodity. So you kind of need that cleared up, whether that's in the case of kind of similar to like what Ripple has gone through. You've got like at least a little bit of like binding clarity from the courts. You might need something like that, or more likely, I think what you need is a literal like act of Congress to kind of clear all this stuff up for some things other than Bitcoin and Ethereum to get through. I mean, the way right now it's set up is you need a futures market that's regulated and surveilled, and the CFTC feels comfortable with it, and the SEC will allow it. And you can kind of use that to get a spot ETF. That's what we had with Bitcoin. That's what we had with Ethereum. We don't have any other markets for any other digital assets that could go through that same process, right? So you kind of need some other thing out there to happen for these things to get approved. That said, there is nothing like in the SEC regulation that says like you need a futures market that is surveilled for all these things. That's just kind of the process that this SEC has followed and what they wanted. It's not like that's hard coded into any law or language or anything. That's why I said if we get a change in the admin at the SEC, then that could also change. But there's a few other you need catalysts. One of those 3 or 4 things I just mentioned to happen before you can get something like a Solana or possibly even a Ripple ETF.
Yeah, great point. And most likely we'll see what the landscape looks like in 2025 because 2024, it's done, right? Lame ducks coming up, campaigning, and Gens are still there. So we got to wait to see, like you said, is there a regime change? And under Trump, it'll be more pro crypto. So fingers crossed. It'd be nice to have Solana, maybe an XRP ETF in 2025. But then it goes back to what we were talking about earlier. Would it be too saturated for the masses, right? They would get confused. Why do I need to invest in Solana? Isn't Ethereum the same thing? Let me just handle big. Let me just have some Bitcoin, right?
Yeah, I mean, the one thing I would say is that like the Solana, there's Solana ETFs elsewhere, right? Like, yeah, we don't have them in the US, but we have them in Europe, and there's a couple $1 billion over there in those ETFs. So they're big business. I think a lot of that has to do with money came in when when Solana was like in single digit prices. So there was a lot of money that was in there, and then so you don't need that much to be in there, a few $1 million for it to get to the level it has when the price has gone up, like I don't know, 20x or whatever it is. So I think that also played a role. But it's still there's a lot of these ETFs elsewhere, just not here in the States. So there will be demand, but like you said, I just think right now, as things currently look, it's kind of Bitcoin first, and then everything else will be slower burn or just maybe not garner as much interest from the TradFi world, at least in the near term.
Hmm. Now, I wanted to ask you about Bitwise Asset Management and their acquisitions. First was ETC Group, and then they, I believe, Osprey, and they merged the funds accordingly. So this is pretty big. It looks like they're trying to grow their market share, expand as much as possible. What do you think about these acquisitions?
I love them, honestly. I mean, there's been this huge there's always been a lot of consolidation in the asset management industry around ETFs. So for many, many years, it has been a lot of like large legacy asset managers buying ETF issuers who know the ETF market and how to do it, and basically then launching their own products with the IP that they get from those products. So that's been going on for over a decade, and now we've seen a lot more consolidation where like these bigger ETF issuers in the U.S. are buying smaller shops elsewhere in the world, whether they're European specialists or even in Asia. So in the case of there's actually some asset managers in Asia that have bought big U.S. issuers to kind of drum up the interest there. So that's been just an overwhelming trend that we've seen over the last few years, and it's picking up. And I think it's a good thing. It's basically Bitwise sees them. They bought ETC Group. They have a bunch of ETFs in Europe, particularly holding crypto assets. So there's probably a lot of overlap they can do there. I mean, for example, they own now a Solana ETF in Europe. So 21 Shares, who's another issuer, the one that we just talked about, who also filed with VanEck. They have some ETFs. They have the largest Solana ETF in Europe. And you have VanEck also, who has ETNs or ETCs, whatever you want to call them, in Europe that hold these things. So there's plenty of experience over there already with dealing with these types of products. And then OBTC is unique, I think. So OBTC's structure was similar to those grayscale trusts, where they were kind of closed-ended. You can come in, but you couldn't really leave but you could sell your shares, you couldn't redeem them. So theoretically, if it was trading at a massive discount, you just had to sell at a discount if you wanted to sell. And these things were trading at a bit of a discount. A lot of people thought that Osprey was going to go through the same process that Grayscale did and, convert this thing to an outright ETF. But I think this was probably the best case scenario for everyone involved. I mean, doing that is very expensive. They only had $130 million in assets, I think. So it's not like it was a huge cash cow. And this way, those holders of OBTC are basically just going to get Bitwise's BitB shares in return of equivalent value. So all of a sudden you get out, you're no longer at a discount, and you still have exposure to Bitcoin. It's a non-taxable event. And then also Osprey doesn't have to spend a bunch of time, effort, energy, money, you name it, going through and converting this thing into an extremely competitive market where fees are 20 bips and lower. And there's already, we talked about this 10, 11 products that hold spot Bitcoin, like Osprey just launching and converting OBTC. It'd be hard to compete there. So I think this makes sense for everyone. And like you said, Bitwise is growing its asset base. It now holds it now owns that 130 million. I don't know what they paid for it, but they have those assets now inside, or they will have those assets in BitB.
Mm. Tough question for you. Does this move put them ahead of any of the folks they were behind in the market cap list, so to speak?
I can tell you in a second.
Mm.
So BitB, they have right now they have 2.1 billion dollars, and they're just behind ARK and 21 shares. And then you obviously have Fidelity at 10.2.
Mm.
And then you have iShares at 20.7, so they're over 20 billion. And GBTC is down at 13.3. So they didn't jump anyone. It extends their lead over the mini trust. So we didn't really talk about this too much, but Grayscale's unique process of spinning out a mini trust at a much lower fee. Now that product, ticker BTC, has 19 or 1.9 billion in assets. So, I mean, the other thing I should mention here is, like, everyone talks about these things, they're looking at it, but like all of these ETFs are extremely successful. I mean, most ETF issuers, they get one product that could have over $100 million in assets. They'd view it as an extreme success. And all of these guys have gotten there within 8 months, not even. So it's been an absolute smashing success. But no, I mean, also it's only 130 mil. So I mean, obviously that's a lot of money, but it's not a huge deal in the type of numbers that we're talking about. But it will be beneficial. It'll probably get them much closer once it's fully complete to ARK B, ticker ARK B.
Yeah, it's pretty amazing. I think it's important for us to have perspective. Like you said, traditional asset ETFs. I mean, to have 100 million would be successful. We're talking BlackRock having 20 billion. I mean, it's incredible in just months. It's wild.
Yeah, they're very close to 21. They're at 20.7. They're over 20.7. So
Wow.
yeah, very, very close to the famed Bitcoin number.
Mm. Okay. Final item here. We got news yesterday from the FBI that North Korean hackers are supposedly targeting crypto ETFs. And they're targeting, I think, the custodians, if I'm not mistaken, which would be primarily Coinbase. What are your thoughts on this? And it seems, just in principle, we need some diversification of custody here, right?
Yeah, honestly, I do think that's the one thing where I'm fully on board. I think there needs to be some diversification of the custody of these things. I think it will happen. It's going to happen over time. Some of these issuers are going to stick with Coinbase as their sole custodian. Obviously, there hasn't been any issues really yet. I think it's highly unlikely that it's going to happen, but I would never say never. But also, it isn't that surprising considering, like, I feel like every other month I hear about the Lazarus Group or North Korea hackers, like, getting on board on some, like, project and then siphoning away assets and things like that. So it's not surprising at all that they would target, like, what is, I don't know, it's the biggest honeypot of Bitcoin in the world. If you're going to go look at how much Bitcoin that Coinbase holds, I don't know what the exact number is, but it's an absolutely stupid number.
Hmm. Yeah, I'm hoping we don't have any issues like that because that would be so detrimental to the market. But I know Coinbase, they do have tier one security and services and so forth. But I think, like I said, just out of principle, we need some diversification, and maybe Congress and they can get this SOB 121 situation figured out with the SEC, and maybe BNY Mellon and some of these banks can come in and take some of that custody over. I don't know.
Hey, I mean, all those banks, they're trying, they want to be able to do this stuff. We've heard rumors that there is going to be exceptions to SAB 121, and they will come into the space and compete. So time will tell. I mean, you have BitGo and Gemini that are already here. So Gemini has a bunch of products that use them as custodians in Canada and elsewhere. VanEck uses them as a custodian on their ETF HODL. And then obviously BitGo is trying to get into space as well. So I think we'll see more of these issuers, split up who they use. I mean, Fidelity uses their own custodial service, so I assume they're just going to stick with their own custodial service. I think BlackRock is likely just going to stick with their partner in Coinbase, and they have their partnership going on. But I think some of these other issuers, I think I would not be surprised at all to see them, diversify and use some of these other, the current ones, the BitGos of the world, or like you said, BNY Mellon, State Street gets into space, any of these other, like, traditional qualified custodians, if they enter the space, I think we'll see it happen.
James, always great insights, my friend. Thank you so much.
Yeah, thanks for having me, Tony. This is great.